Thanks, Tony, and thanks for everyone for hanging around before the break. I'll try to keep this punchy to keep everyone awake. Great to be back at this conference. It's fantastic for those who I've spoken to already. A lot of fond memories over the years coming to this event, and I missed it last year, so good to be back. And for those who've been following Chalice story, you'll know we've made I guess one of the more significant discoveries in Australia in the last 20 years. It's a palladium, nickel, copper discovery in Western Australia, and it's really a very, very special, unique asset that Chalice has, as Tony said, been on a very, very wild ride on over the years. So we're having the scale of the asset that we have there at Gonville. Like I said, it's a tier 1 scale project, a very, very significant resource of palladium, nickel, copper and cobalt in the ground in Western Australia. And that means we're very, very leveraged to movements in those underlying commodity prices. Right now, we're sitting at sort of 5 or 6 year lows in palladium and nickel. So any sort of improvement in those metals prices is likely to transfer directly to an improvement in our share price. So we have 17 million ounces of precious metals in resource, 960,000 tonnes of nickel, 540,000 tonnes of copper and 96,000 tonnes of cobalt. Starting at surface just outside of Perth in Western Australia. It's a truly spectacular resource, quite a complex, unique mix of minerals, but we're really in the midst of a pre-feasibility study at the moment, really looking to optimise how we extract those and build the project. We've also commenced the regulatory approvals for the development as well. There is, like I said, compelling value here. We've spent almost $200 million on this discovery since its discovery in 2020. It's going to be a very, very competitive asset. So it's going to sit in a very, very nice part of the cost curve relative to other PGE producers. And when I've talked to you later today about, we've got 10,000 square kilometres of surrounding exploration licence. And the most important thing here is that it hasn't been worked by any other explorers. There's basically totally untested, unexplored ground. And that's a huge amount of Western Australia that we've got under licence. So I'll show you some of the work that we've been doing there. In July, we announced a strategic MOU with Mitsubishi Corporation, so one of the world's best, foundational joint venture partners in the industry. Obviously very, very active in Queensland as well. Mitsubishi, really the intention there is that we're going to work together on the PFS and finalise a binding partnership once that PFS is completed. And we've got lots and lots of cash to keep us going and very, very strong financial position. So we're not going to need to dilute holders. We can weather the storm of low prices for a very long time here. So it has been a wild ride on the market. We, as I said, we're very leveraged to movements in the underlying commodity prices. Our register, number one is Tim Goyder, who most in the room will know. Tim's a fantastic entrepreneur and a creator of wealth and discoveries. We've got Paradise on the register now in Sydney holding 5%. They've just picked up that position. Goldman Sachs at 5% and a number of other institutions making up about 36% of the register. Market cap today about $400 million and like I said, about 111 million in cash and listed investments. So it is really at rock bottom sort of valuation at the moment. So why platinum and palladium? And most people probably wouldn't be familiar with these metals. They're not that common in Australia. They're really sort of all found in Russia and South Africa. And why you should care about them is that this is what sort of a lot of major cities looked like back in the 90s before the adoption of catalytic converters. And it was a bit of a mess. You had sort of smog. You had very, very poor air quality. And then in the space of about 20 years and through sort of addition of platinum and palladium in these catalysts, you've basically seen an almost complete reduction of air quality issues in cities. So it's they are very, very remarkable metals, but they are extremely difficult to find. So they're something like a 20th of the crustal abundance of gold in the Earth's crust. So very, very rare, but they're very, very important. And right now, they're even more important, I think. Most people have forecast that, battery electric vehicles were going to replace internal combustion engines on the roads. And that certainly has been the case for the last few years, but really in the last 12, 18 months, that's started to stall. So you're seeing really people are now really pivoting to hybrid petrol and battery, and something like almost 50% of current US battery electric vehicle owners are considering switching back to a hybrid or an ICE. So consumers are really voting with their feet at the moment. As you can see on the bottom left there, hybrid vehicle sales are taking off. And of course, hybrid vehicles, because they've got a petrol engine, they require palladium-based catalytic converter. So the idea here that demand is going to go away for these metals is completely not sort of matching the reality in the trends. But yet a lot of demand and supply forecasts still have those same very rapid BEV adoption curves built in. So that's going to, that's really going to play out, we think, very soon in the palladium market. Supply is also very concentrated in Russia and South Africa, as you can see at the bottom left there. These are aging, very, very deep, underinvested mines. They're all battling away at the moment, cutting costs wherever they can, sacrificing sustaining capex. So they're really shrinking, trying to survive these current low prices. We're also not seeing anywhere near the amount of recycling that all the models had predicted. So all the forecasts have been completely wrong. And recycling is nowhere near growing. It is shrinking actually at the moment. And as you can see there, the palladium price over the last 5 years or so has been very, very volatile. It's moved from about $1,000 pre-COVID up to about $2,000. It went as high as $3,500 an ounce during the Ukraine invasion. But since then, it's pulled back all the way to about $900 an ounce. So that's, I guess, partly why Chalice's share price has gone from 16 cents to over $10 a share, and then all the way back to $1 a share today. So if you see a repeat of this 5-year price chart, you can sort of strap in for a very volatile ride. And at the moment, PGE prices are so low that we're starting to erode, into the cost curve. So something like half of the South African miners are really loss-making operations at the moment. So anyone on the right-hand side of that chart there, all those high-cost mining operations are looking at shutting down. The first one to go is likely going to be Stillwater. That produces about 7% of global supply. That needs $1,800 an ounce to survive, and then the basket price is at the moment about $1,100 an ounce. So you can imagine the losses being incurred there are quite extreme. Gonville will sit where that orange bar is there in a nice little position between Russia and South Africa. So we'll be able to survive all these price cycles over a very, very long life asset. So we will sit pretty, and had we been producing right now, we would still be generating positive cash flow. So the project just outside of Perth, like I mentioned, we've got Mitsubishi involved. It's a tier 1 scale resource project, very, very unique in that, half of the revenue stream will come from palladium, but then a good amount of revenue will come from nickel and copper. And then we'll get a bit of byproduct credit from gold, platinum and cobalt. It's going to be a very competitive asset. We've bought the farmland as well that sits around the projects. We own 22 square kilometres of farmland. That really de-risks permitting this operation. And it's all going to be shallow open pit mining. So the benefit here as well is that the resource starts at surface and we can pick the eyes out of the high grade and really sort of improve payback in those early years by high grading the front end. And it's sulfide mineralogy, so that means you use conventional processing techniques to basically sell products in concentrates. It's got a lot of optionality. Like I said, there's a lot of high grade within the resource itself. So the global resource, as I said, 660 million tonnes, which contains 17 million ounces of PGEs. There's a high grade component. About 10% of those tonnes have about 2.5 times the average grade of the global number. So really, the initial priority is to really sort of selectively mine that high grade material. As prices increase over time, the benefit of, I guess, precious metals is they're very, very rare, they're very scarce, so prices do go up above the rate of inflation over the long term. So we will be able to open up a larger and larger scale operation here over time. So initially starting small, but then dropping that cut-off grade over time to process more and more. And the flow sheet, really, it's a concentrator at the front end, a bit like Nova of IGO. Will produce a copper concentrate where part of the PGEs will concentrate into, and then we'll produce a nickel concentrate where you get another portion of the PGEs, and then we'll leach the flotation tails using conventional technology. Over the long term, we would hope to get into the midstream and do some additional processing on the nickel side. So I guess all of our optimizations and a lot of test work going on at the moment, really trying to optimize that product mix and getting them the maximum recovery, particularly into that nickel concentrate. So on the exploration side, obviously that's a fantastic asset to own, but obviously in a depressed metals price environment, really we have continued to explore this new province in the background. We haven't talked a lot about the exploration we have been doing over the last 2.5 years, but we staked a very, very significant portion of WA here in the western side of the Yilgarn. So we're right up against the western edge of the Craton, and that's where you go looking for big intrusive hosted deposits. We're really looking for Gonville's and other repeats of our discovery, but also things like Boddington. Boddington is a 40 million ounce gold deposit. It's Australia's largest gold mine. It's got a pit that's about 650 metres deep. It's an enormous operation, and I guess it's a very unusual circumstance in that Boddington, there hasn't really been a lot of repeats found over the years in that area. We think basically going north at Barra is one of the very obvious, sort of parallels to that geological setting. So we're systematically exploring that area, and we recently announced yesterday some very attractive gold targets in that Barra area. So this is the project. Previously, before we rocked up here, not a single drill hole, no idea of what the underlying basement was. Now we've done about 2 years worth of systematic exploration, and we've mapped these huge stretches of new greenstone belt geology. So those who know gold exploration know the best place to look for gold is in these greenstone sequences. You can see there in the centre of the page, there's a 15-kilometre long gold anomaly called Recherche West. That's sitting, between a granite and in a greenstone sequence. That's a very, very large-scale anomaly that we're going to be drilling very soon. And then there's another 2-kilometre long anomaly down the bottom right-hand side there, in that figure called Warspite, an even higher rated anomaly. So both very attractive targets to go drill. You can see on the left, these things are completely undrilled. No one even recognised the fact that there was greenstone geology here prior to us. So very, very exciting air core program coming up in the fourth quarter. And we'll go and do systematic exploration work on that. And I think, really the target style is orogenic gold or classic goldfields orogenic gold, but also these intrusion hosted systems like Boddington. These are very, very attractive gold copper targets to explore for. And you can see, obviously, a lot of potential. You can imagine one hint of gold mineralisation in this area would totally re-rate or totally revolutionise the geological understanding of the West Yilgarn. And that's exactly what we did when we drilled the first hole in Gonville. We showed, the geological survey and the industry that there was potential for magmatic sulfides on the western side of WA. Now we're really, turning those smarts towards the next big gold province in WA. So we're fully funded, like I said, 111 million in cash and listed investments. That's a fantastic, financial position to be in. All that metallurgical test work, there is a lot of metallurgical test work going on at the moment. It's an incredibly crucial part of defining Gonville and how we're going to process those minerals. We're targeting completion of that pre-feasibility study mid-next year. We've started the regulatory approvals process. Appreciate it's not the most sexiest sort of activities. It is the sort of the more boring part of project development, going through approvals and engineering studies. But don't worry, that I guess a movement and a recovery of metals prices will absolutely result in a recovery of the share price. We're also really actively exploring, like I said, the priority right now is air core drilling at that Barra project. Some very, very attractive gold targets to drill. And then we'll move into more financing and project offtake in the second half of next year. So really, to reiterate, we've got a fantastic large-scale asset that's, on sale at the moment in the market. A lot of upcoming catalysts and a lot of land to explore for the next, sort of frontier, sort of game-changing discovery. So thanks very much. Come and see us at the booth if you'd like to learn more.